Well, first of all, thank you, Investing Note, and thank you, Jay, and also Yongsheng on the line. Thank you for inviting me. Very delightful and pleasure to speak in front of everyone here to share about my investing journey, my experience, and also touching more on the US stock market. So how I got started, as a background, I'm a mechanical engineering graduate, started working as an analyst, and then now you can say full on as an investor slash YouTuber content creator kind of a job. So my journey started, I think, 4 to 5 years ago, investing in the US stock market. Back then, there wasn't much hype in the US market. It was not until I think 2019 when the trade war started erupted and people were talking about Donald Trump, Xi Jinping, all this kind of thing already. And then Tesla was making a little bit of noises. And Apple back then was also rising 1 trillion, 1.5 trillion, 2 trillion. It was back then I thought that I really needed to look at the US stock market. So I started searching. And to be frank, there wasn't any, to my surprise, there wasn't much resources in Malaysia that talks about US market, I mean, sure, we have a lot of great US content creators like Graham Stephan and Andre Jig, all those great analysts and also content creators in general, or just experts from all the banks as well. But from Malaysia's point of view, there wasn't much sound. Even investment banks in Malaysia, they usually just talk about Malaysia, maybe Hong Kong, maybe Singapore, but not much about the US. So I thought, rather than be the quote unquote professional or expert in that end, why not I be the one that, everyone can relate and be a content creator that talks about the US stock market. And so I began my journey over there, talking about the US. I started on with stock brokerages first. Later on, I dived deep into the stocks, ETFs, and then, I branch out to US ETFs that are listed on other stock exchanges that can help with tax evasion, tax reduction, so to say. And then a lot of things that revolve around that era. So that's a little bit of my background when it comes to the US market. So how about you, Jay? How did you started with US market actually?
On my end, I started on the US market is one thing is because I'm interested. So upon when I got interested into US stock market, I would start exploring all kind of ways. Because one thing is like being so far on the Southeast Asia in Malaysia, we don't really know how to actually invest in the stock market. Yes, we have a lot of options to invest in the local stock market. However, it has become quite a troublesome thing to look for on how the steps to take to invest in the stock market. So my next question will be, what are the basic steps of someone should take if they're new to investing and want to start on the US stock market?
Okay, so steps to start investing in the US stock market as a total newbie, total beginner, right? Wow, I can boil it down to so many things. I mean, obviously,
because, for example, like myself, right? If I were to, I wish to have a mentor that can actually teach me to start instead of me trying to search for a path myself, which I would have missed the opportunity by then. So give us some tips. I'm sure the participants will be love to hear on how to start.
Obviously, my pleasure. So I think rather than seeking out left and right on what are the best tools and stuff left and right, I think it all comes back to us ourselves. Ask ourselves first, why do we even want to start to invest in the US stock market? I think that will set a very strong fundamentals on, actually, I want to do that because of certain reasons. And that's why I invest in the US stock market. Not because when someone is talking about GameStop or Tesla or Apple and it's S&P 500, it's sexy, it's high return, I don't think those are great reasons to start investing in the US market in itself. So back to your question, how should we start first? I think fundamentally, you need to have that reason, the why you want to invest. For me, the reason was very simple. Ringgit was depreciating against the US dollar. So it makes a lot of sense. I mean, historically, just look at the chart. It's 4.69 ringgit to $1 right now. So historically, in terms of currency diversification, it makes sense for us to invest in the US stock market. Next, the amount of companies, great companies, tech companies, or just companies in general, not just in the tech scene. There's so many great companies over there. In tech, I mean, we all know the tech companies, Apple, Google, Microsoft. Then in the consumer staples, you got Procter & Gamble, Walmart, these kind of companies. And then, I mean, there's 1,000 companies we can name off, like all the investing mentor, Warren Buffett, Charlie Munger, all the companies are all over there. So I think these two, right, fundamentally sets the stone for why I wanted to invest in the US stock market. So then I dive to the next step. How do I actually invest in the stock market, right? So from Malaysia, if you want to play the safest game, take zero risk, there are Malaysian brokers that you can go for to buy in the US stock market. The safest and the most expensive ones that everyone have access to is to go to your retail bank, your Maybank, your CIMB, your Hong Leong, your public bank. All of them offers US stock trading. You can buy US stocks via those banks. But the thing is, they are traditional banks, they are legacy, and they move very slow and they don't innovate. So they are very expensive. 25 US dollars per trade. So imagine 25 US dollars is like what? 110 ringgit just for one single trade. But that is where younger fintechs come in to innovate and to disrupt this industry. Young brokers like M Plus Global, well, when I say young, they're not really young. They are backed by Malacca Securities, 60 years and top 3 in Bursa, Malaysia. So Malacca Securities, Rakuten Trade by Kenanga Investment, FSM1, there's so many great brokers in Malaysia that allows you to trade in the US stock market. So you can actually just open an account with them, just like opening a bank account. But I think today, thanks to the digital era, everything is so digitized and so simplified. Just with your phone, download the app, M Plus Global or Rakuten Trade or FSM1 by iFast Capital from Singapore, or MIDF Invest by MIDF, the company itself. Then, just open an account, KYC, put your money in, choose the stocks you love. That's to me the most straightforward and simple way. But obviously, if you want to take the extra steps, you want additional markets, you want additional products, not just stocks, ETFs, and then you want more options and futures and whatnot. Obviously, that is, in the deeper end of the pool already. Then we have outside players like Interactive Brokers, Momo, eToro, Webull, these kind of companies, Tiger Brokers that provides you the platform to invest in them. So I think 2 steps. One, understanding that I want to invest in the US market fundamentally for what the reasons. Second, getting I would say a regulated / safe broker to invest in. And then third, once you got a platform ready, before you pull your trigger and buy any stocks, obviously research your fundamental investing, your research, everything matters. Obviously there's fundamental and also there's technical investing, technical trading. But to me personally, I stick towards the fundamental end. So fundamentals, obviously you can use tools to help you. There are lots of great tools out there. Investing Note yourself, right? Your platform offers a lot of financial data analysis, comments, all these tools are all great tools to help beginners to even look at data that is not so obtainable in Malaysia. And other than that, you have like what, Morningstar, Seeking Alpha, investing.com, these kind of websites, TradingView, or even on the news platform, CNBC, Bloomberg, all these kind of platforms. They are great for you to start your research, because you don't want to just buy stocks or buy ETFs and know nothing about the US. You want to also have exposure to the United States, the country. So you need to read news about them. What is their central bank, their Federal Reserve doing? What is the politics? When is their next, election? This kind of thing. Even though some social issues, I think it's all great to know, because all of those will translate into policies and regulations, and that will transfer and impact the stock market as well. So it's like a whole cycle, understanding economy, understanding the industry, the technology, and then the business models, but those are the steps that I would put for beginners. That's like the top-down level. Yeah, go ahead.
But however, you mentioned just now on the conventional banks and the new fintech brokers house and everything. I believe on that end, I believe both have their pro and cons as well. On one end, I would say that conventional bank is definitely have greater, higher trust on that matters, whereby it's bank backed as well. However, on the pro side, on the fintech side, it's more efficient on however it goes. So I believe each broker's house have their pro and cons as well. So for the participants, stay tuned with us, because as for investing, one day we'll have a lot new features launching soon, which by where you can actually have a look on all the brokers and everything. And besides that, as mentioned by Ziad earlier just now, yes, we offer all kinds of sorry. As the data analytic tools, in terms of investment itself, we offers all various kind of data analysis in terms of financial results, financial breakdown. Like you see here, it breaks down all towards for the revenue, gross profit, profit after tax, before tax, and even all other expenses. And besides that, we actually have all kind of reporting on the earning as well, whereby it shows all the financial years, revenue, earning per share, whereby people have no time to go and calculate one by one anymore. So these are some of the products that can actually save people time, whereby make it invest easier and simpler. But outside of that, we also compare with peers, and then as well as all the dividend per share growth, and of course, most not offered by most no analytic tools is that we include top shareholders as well. So from time to time, participants do check it out and let us know on your opinion as well. But besides that, I have more, after you teach us on how to open the account and everything, what kind of strategies that you actually suggest we explore into?
Sure. I think as a starter, even for myself, right? Obviously, there's tons of strategies out there. You know, you have the magic formula, you have dividend investing, you have short-term trading, long-term trading. There's so many.
Too many.
Right? There's too many. And I think to answer that question, short answer is short answer, long-term investing. But the long answer is there is no one size fits all. Some people prefers, their long-term investing is defined as 3 months, 6 months, 12 months. That works as well. Because to a short-term trader, they look at long-term investing as more than 1 week, something like that. And their short-term is really by minutes one. So that is on the trading end. But for beginners or starters in general, obviously this is not financial/investment advice. How I would like to restart everything and doing it myself again is I would look at long-term investing. So what do I mean by that, right? It's very generic and a lot of people overuse that word long-term investing. Very boring lah, very typical advice lah. But to me, if it's boring, and that is what Warren Buffett say, investing should be boring. If it's fun, right, you might as well just take your money and go Las Vegas, right? So and go casino, right? So I think that's the essence of it. Things that make money, it's boring one. Business models that are super interesting, sometimes it can make money, but sometimes it's very risky as well one. So things that can make money consistently and increasing year after year, that is what you want to invest your money into, right? You don't want your Maybank savings account to one day become 0.2%, one day become 0.1%, one day 5%, another day 2%. You want your Maybank savings account to be stable, so you want to invest in good companies. So the same idea applies here, right? You want your money to be invested in companies that have, I wouldn't say mature business model, but have a very good direction of where they're heading towards. What's the total addressable market, the TAM and the serviceable addressable market in the industry? Is it even a good industry? Is it a sunrise or sunset industry, right? So long story short, right? Long-term investing, look at a company's direction, who's their management, who's helming the lead, like companies like Tesla, you have Elon Musk, there is a visionary. I mean, obviously some people don't like Elon Musk, understandable, but if you just take a step back, forget about the name, what has that CEO or what has that guy has achieved? He's invented reusable rocket that lands on its own. He's invented, not to say invent, but he is the one that popularized and commercialized electric vehicle. Anyone can, not to say anyone, but most of the scientists or most of the top tier CEOs, they have the money to create EV, to research for EV and etc. Creating is one thing. Innovating is one thing. Commercializing and scaling something takes that to another level, and not every CEO can achieve that. So if you look at Elon Musk, he is able to do that from a concept to something that everyone hates, now to something that I wouldn't say everyone love, but a lot of people start loving it already. So that's the kind of change and disruption you want to see in the CEO's vision. Obviously, vision can be great and vision can be disastrous as well. Great visionaries like Elon Musk and Warren Buffett, etc. I would say not so great visionaries would people be like Mark Zuckerberg with the metaverse and this kind of thing. Personally, not a fan of it, But yeah, that's the way I would look at it.
Yeah.
Start with long-term investing in great companies.
Right.
Yeah.
But I would say that in terms of that, different people have different perspective as well. Some people like Elon Musk, some people don't. However, since we mentioned about diversification, Warren Buffett as well. Warren Buffett focused made a lot on diversification. And he mentioned something before, something, do not put all of your eggs into one basket. So what's your opinion on that? How important is diversification in stock portfolio? And how can the beginners actually achieve it?
Okay, so diversification by definition, it means that rather than going all in on something, you diversify. Rather than 100% on something, you go 25% here, 25% there. Obviously, the more diluted the percentage, the more diversified you are. So is it good or not to diversify? The answer is it depends. To me, it's always like there is no right answer or there is no wrong answer towards this kind of topic one, because it's very subjective. To me, it's how I would put on the weightage of how important is diversifying at this current age, at this current stage of life. So for me, at 28 years old, with not much commitments, not much family commitments, housing commitments, not much, etc., I can afford to take a lot of risk. So diversifying makes not much sense to me. But for people with family commitments, for people with near-term commitments, incoming commitments, or for people with income instability, you don't have consistent income, or you just might need cash for a business or your family, etc., then maybe going more diversified route would make more sense, right? So that is what I would view diversification as lah. So for me, I personally diversify into 4 stocks. For a lot of people, 4 stocks is 100% equities. It's still very risky and very dumb. Some people like 80% equities, 20% bonds, or 80% equities, 10% bonds, 10% commodities, and cash and etc. To me, that's fine. You want to do that, by all means, go there. For me, in terms of my stock portfolio, it's 100% into US tech stocks. But for some people, ETFs might make more sense to you, exchange traded funds, diversify in terms of industry or in terms of country or in terms of region. You have developed nations like US, Europe, etc. Then you have emerging markets. Then also you have developing markets as well. So there's many ways to diversify your investments to answer that question.
So after talking about diversification, then I heard that you mentioned on your portfolio mainly on the tech industry. Then are there any specific industry or sectors that the US stock market that are particularly reliable on the US stock market right now? Is the tech side the one that we should be focusing on?
Which one is more reliable?
Yes, because if you ask me, when I first started investing in the US stock market, there's a ton of industries, agriculture, manufacturing, and all kinds of industry that goes around. And tech industry is definitely one of the things that catch my eye. However, there's a lot of other options as well. So how do you actually justify that particular industry is the way to go?
Right. So I think to define reliable, right, it's very subjective. Again, it's relative on what you're comparing. If you want to say reliable, right, utility companies would be very reliable because they are the core essence of a nation. Like in Malaysia, you cannot don't have TNB, you cannot don't have Maybank, these kind of companies, right? So obviously Maybank is a bank, financial services, not utilities. But back to your question, right, how would I know that particular sector is good? How would I choose my particular starting sector or starting industry to look at, right? Well, I mean, just if you can't really decide based on what you see on surface, then look at data. What is US famous for in terms of its stock market? New York Stock Exchange and also NASDAQ. What are the top components? Tech companies. Apple, Google, Microsoft, Facebook, Nvidia, all are tech companies. I think 7 or 8 companies out of 10 companies in the top 10, they're all tech companies. Okay, then we look at the S&P 500, one of their top, if not the most popular index in the world, right? S&P 500. What are the top constituents in the company? If I'm not mistaken, about 40% weightage in that particular index is all tech companies dominated. Obviously, because of their market cap weightage, right? So big companies are like what? Again, those tech companies, no? Apple, Google, Microsoft. No? So that would make sense for a lot of starters to start looking at that sector, right? Instead of looking at other sector, but not to say other sectors are bad. It's just easier to look at tech sectors. Why would I say so? iPhone, everyone knows. Apple, everyone knows. AirPods, MacBook, etc. Microsoft Words, Microsoft Documents, Microsoft products, everyone knows. Facebook, Instagram, WhatsApp, it's all in our life. Zoom calls. Here, Zoom in itself is a listed company in the US. Nike, Adidas, all those are US companies. So obviously those are, consumer stuff lah. But tech companies, it's all around our world. And we are, I would say 90, if not 100% of us are using their products on a daily basis. If you're using a computer, very high chance it's a computer or a design or a chip from the US. Obviously, there are Chinese computers, but 90% of us, we all know their products or use their products on a daily basis. So that is more, I would say, relatable. That's why tech industry is more relatable to us. Obviously, they are not to say better, there are other industries, strong industry in the US as well. There are financial services, Morgan Stanley, JP Morgan, Wells Fargo, all those big banks, right? Obviously, Malaysians or Singaporeans, we wouldn't hear so much about them. But because I've worked in the investment banking kind of slash VC sector before, all the bankers, when we have any big projects, to advise on, all the experts slash financial advisors are from all those big banks. But obviously, normal day Malaysians, people like us, we wouldn't see much of those bankers. But in terms of their importance and influence on our economy, on our projects and etc., they actually make a lot of difference, right? And they could be the decision, the decider whether or not Malaysian government invests in a particular bridge or a particular LRT or MRT in a certain places as well. Those are decisions made by bankers and investment bankers and experts from JP Morgan, Morgan Stanley, etc. But we all don't know. But they are there and they are important and they are famous, just that not in Malaysian's context as well. So yeah, that's how I would say relatability and performance, historical performance wise, tech sector, takes the cut lah.
Then after we make an analysis on the sectors, what about researching and selecting the stocks? For example, after I select the industry that I like, that I feel like is interested on, next, obviously selecting one of the stocks that I like and everything. So what are the techniques that you like to teach us on researching and selecting individual stocks, I would say?
Okay. In terms of, I would say now that probably you're diving into like more on fundamental analysis, what are the parameters or metrics that I would look at now? So this is what I learned before lah. Obviously, you can look at every single parameter, PE ratio, whatever cash flow ratio you can get, your capital ratio, etc. Those are great and important to know as a basic. But I think more importantly to me, right, if you want to start from the top-down approach, right, which means you look at the economy and then you look at the industry and then you look at the company, right? It's a top-down approach. To me, it's first of all, if you ignore the US portion, because US like as a economy in itself has already proven itself to be high growth and a reliable and slash innovative, etc. already. Then if you take one level down, I would look at industry in itself. I think that makes more sense rather than diving into the particulars of a single stock yet. So looking at the industry, right, what is a total addressable market? Like for example, if you're talking about EV, right, it's automobile industry. What's the total addressable market in the industry, and who are the one leading the charge in the automobile industry? We have companies like Toyota, companies like Ford, GM, all these Chrysler, these kind of companies, right? But because they have not been investing in the electric vehicle sector as much as compared to Tesla, right? So if today the EV industry is 10%, I think 2 years ago it was 6%, today is 10%. So if you just equate that towards Tesla's market cap, right? Obviously, Tesla is not the only EV market. Then you can roughly get the gist of where the market cap of the company is going towards already. So if you think today EV is going to be bigger, if you think today that EV is going to be bigger in the future, let's say today is 10% of all automobiles. Let's say maybe 5 years down the road, it's 15 to 20%. So by nature, the market cap of EV industry in itself should at least grow by that proportion, right? So you just look at market cap, market capitalization, which means how much market value a company is in the stock exchange. So if market cap increase, right, divided by number of shares, that's your share price. So your capital gains, you gain money, you profit from that growth, so to say. But if you take one level down, look at companies, right? Rather than diving into the numbers in itself, I think it's better to do comparison analysis. If you say you want to invest in Apple, just take who are the comparables left and right with them. Apple, Microsoft, Google, I would say they are more or less comparable. Then you can look at their ratios, forward-looking ratios like forward PE. Maybe I think Apple is around 17 to 19 alongside those tech companies. Today might be higher already. It used to be 8. Sometimes people say 7 is like the best, but then back then Apple was 12 times forward PE. People also say you are crazy to invest in Apple. But today I think it's easily 20 already. So that's how much the industry has evolved, or the stock market has moved. It's so dynamic and it's so fast, right? So back to that question, comparable analysis, looking at its peers, the competitors, rather than comparing Apple with a Procter & Gamble. It's not an apple-to-apple comparison. But when you look at the industry, yes, they could be 17 to 20 PE, technically expensive relative to utilities or consumer staples industry. But looking at tech sector, if the average PE is 20 and Apple is 20 today, then in terms of valuation-wise, maybe it makes sense. But this is because it makes sense for PE only. Then you look at other ratios, then you look at their business model. Are they capturing, like for example, Apple? How's the products working? Is iPhone release capturing demand in the China or in the US? Or are the new MacBooks innovating itself in terms of M1 to M2 chip? This kind of thing. Are they tackling into the PC industry, which they did when they introduced M1 chip back, I think in 2020? The PC industry, I think they took a huge dump, right? And look at NVIDIA and all those AMD companies, they also took a lot of correction because of the M1 chip as well. So I think that can help you to understand and, look into, it's your strategy to look into the stock. There's a lot of things that is tech in itself only. Let's not even talk about other industry, right? It will be endless. Correct. Yeah. And maybe just to answer one of the question, I think Nicholas asked a question. Any recommended analysts for the US stock market, right? First of all, thanks for the question. Feel free to ask anyone if you got any questions, right? More than happy to answer it. To answer this question, because I'm personally, I like the tech sector more, right? So one of the favorite analysts that I always follow is Mark Gurman. He's a writer for Bloomberg platform, so Bloomberg News. So he usually specializes in Apple, a lot of Apple products, Apple stock to say, right? He analyzes Apple, provides leaks on what's the upcoming products for Apple even before they officially launch. How are the consumers receiving Apple products in China or in Germany, in Europe, in Southeast Asia? Those kind of articles and analyst information and commentary, right? It gives you a lot of information because you're just a guy sitting in Malaysia with a laptop and internet, right? So you need to depend on experts' opinions and real-time data and on-site data and information from those people on the ground. So yeah.
Just a quick question. How to know if those analysts are credible? Because I believe from time to time right now, there's all kind of analysts ranging from the legitimate one and the scammer one. So because one thing we do on Investing Note as well is that we constantly educate our community to make sure that they stay out aware from the scams. Because just even one of our, you can see influencers or key opinion leaders that they are doing well, their face are being used to actually being imitated to actually create a fake groups and scammers. So how do you to make sure that they are credible? Do you have any tips on that?
Yep. I think my biggest thumb rule when it comes to how to evaluate whether a person, not to say expert or professional, how to evaluate a person is credible and is someone that you can trust in the long run, right? It depends on whether the person is consistently talking about price targets or the person is talking about the fundamentals of the company. That in itself, right, is the biggest differentiator to me. if a particular KOL or influencer is so famous and millions of subscribers and always giving price targets, yes, it's hot and it worked well during COVID, right? But then where are they today? It's very short-term one, because all those price targets back then, I remember easily every single day there's 10, 15, 20 videos about Neo or Palantir one. Today, all the people that talk about Neo or Palantir are gone. It's short-term hype, but because hype, then it generates views lah. It's great for them lah. But are they great analysts? Obviously no. But today, those analysts that stay until today, that I still follow, there are people that they rarely give price targets one. They usually just look at the company's back end. One of it, I can't really remember the name already. It's I think Tesla Daily. It's a podcast on YouTube one. So that guy, he just analyzes what happens to Tesla, what happens to the factory in Gigafactory in German, what happens to the demand in China. He never talk about price targets. It just gives you information. It gives you sustainable information regarding to a company, and you make your own decision. To me, right, people that encourages people to make their own educated decisions, one of the best, if not the most credible people I would look forward to. So if say analyst ratings, right, like say Mark Gurman, he rarely gives, or if not ever give any price targets one. That's why I follow him, because he talks about the tech in itself, the market demand in itself, more on the consumer end rather on the price targets. Even price targets, there are great analysts that given price targets, but they do flip-flop, because you need to understand, giving price targets, it will affect the stock price, it will affect the consumer sentiment, it will also affect the image of the company itself. Even bankers and investment bankers, stock analysts, and etc., coming from JP Morgan, Morgan Stanley, sure, they are big banks, they are really professional economists and etc. But when they give a price target of Tesla going to $500, or like ARK Invest, they give a price target of $1,500 per share, right? It's nice to hear lah, but then when things crashes, they will cut their discount, their price targets again. So ultimately, the one that loses are the one that follow the price targets, not the one that gives the price targets, right? So yeah, that to me, that's a thumb rule lah.
So let's say if they were to make mistake, is there any suggestion that you think they should get away from that?
Honestly, right, I think first of all, right, to even not get affected by all these kind of price targets, first of all, it's more on personal education. Really educate yourself on a particular industry. Don't even listen to anyone. Just research yourself. Look at articles. Look at news. Look at I would say credible platforms that provides you financial data and also analysis. They don't have anything to sell you one. Go for the free ones. If you want to upgrade to paid one later, that's fine. But try to start with the free stuff. CNBC, Bloomberg, to me, it's more than enough for starters. And Yahoo Finance also, not the best, but it gives you a lot of information. So if you are able to live with free stuff, free education, that in itself is enough to help you educate yourself to not fall for scam already. Then obviously, then down the road, you're more quote unquote expert in terms of maneuvering these kind of price targets, stock tips, this kind of stuff lah.
By the way, just so you guys know, investing is free. It's free to use, so please do not hesitate to use investing to look for all the data you need. Like I mentioned, financial result, financial breakdown, and etc. And from time to time, we do have trading competition as well, whereby you all can actually join. And as of the moment right now, we actually are having my favorite ETF campaign, whereby people can vote, comment, and win one of the most your favorite ETF lah. So let's say if you like Ziad mentioned just now, S&P 500, the AI ETF and everything. This is what we are having here. Do have a look, research a little bit on the ETF. Vote the one you like the most, and you can comment on it why you love it the most, and stand a chance to win a free ETF lah, I would say. So I mean, it's a great way to win a free ETF that you like, a great way to start, and of course, it's sponsored by FSM1. But besides that, let's get back to one more question. Our participants actually asked on another question as well. Let me have a look on the question. Based on the recent clampdown on money laundering, will it be harder to open account offshore?
with the recent clampdown on money laundering, would it be harder to open an account offshore? What kind of account are we talking about? Are we talking about bank account or brokerage account?
I believe they are mentioning on
Okay, I think Jay is probably breaking up. So let me investment account. Okay. So hopefully you guys can still hear me fine. You know what? You the guys just leave a chat down below if you still can hear me fine. Just put a thumbs up to make sure that I know that everyone is still around and I'm not disconnected.
Yeah, Hong Seng here.
Okay, that's great.
You are
Okay.
still okay.
So I think the question is on the recent clampdown on money laundering, right? Will there be much difficulty in terms of opening an investment account or brokerage account, right? I think that's a very mature and very good question to ask, right? Obviously there will be effect on it, but look at it. The way I would look at this is how are the brokerage or how are the brokers reacting to this, right? Very simply, if there's clamp down on certain things, how are the brokers reacting to it? If you look at big brokers like TD Ameritrade and Interactive Brokers, how TD Ameritrade is handling this issue and how IBKR is handling this issue, right? Interactive Brokers has been very transparent from the start until the very end already. And even until today, every single year us as a user, we have to do annual review of our financial portfolio. Then we have to verify our data as well, and then whatever transaction that is cross-border, it will all be detected by our central bank's one. So in a way, if a local bank is comfortable with all the funds moving in and out through interactive brokers, from interactive brokers to interactive brokers, that in itself can already tell you that that platform in itself is sort of safe/secure for you to invest in, right? Because I think one of the main factor or one of the main concerns that people always ask regarding offshore investment account is probably its security. So obviously there is no 100%. I can't really guarantee you myself that that particular broker won't go down the water. But I think one way that we can really help to seek comfort is on how have they handled things in the past. Let's just say in 2008 during the subprime mortgage crisis in the US, who were the one that went down the water and who were the one that came out stronger? So Bear Stearns back then, one of the top, if not the top investment banks and slash broker company, right? They went down the water even though they are big, right? So that's a big concern. But for players like Interactive Brokers and TD Ameritrade, which is Charles Schwab's, right? They came out stronger. So that can tell you they already knew how to maneuver that kind of adverse situation and climate. Plus, they are clean and good enough not to be ridden when it comes to those kind of crises. And if we just wind back a little bit, looking at the Silicon Valley Bank crisis, right? Then you can also see during the banking crisis, who were the weak banks and who were the stronger banks. You have banks that don't have really much money or a lot of long-term debt and have issue, right? Those like Charles Schwab also got issue. But then you look at other banks like JP Morgan or Morgan Stanley, they were the one to the rescue when it comes to buying off all those liquidated banks. So how about other brokers like Interactive Brokers? They were strong. Their long-term debts or slash their long-term bonds and notes, very minimal. It's very minimal in terms of their balance sheet. I think it's less than 2% of their total balance sheet. So looking at all those metrics, looking at historical events, how they manage, looking at how the management maneuver during adverse climates, right? I think that will help to educate ourselves on whether or not it's safe to invest in that particular broker. So hopefully that helps to answer your question. Will there be any clamp down slash more restrictions or more regulations coming from the Malaysian authorities? Obviously, I don't have the answer. I don't know, right? So we can only wait and see how the local regulators react to all these kind of international rules.
Yeah, which is why I say, like mentioned by Ziad earlier, at the end of the day, we must do our own research to find out which one the broker that fits you the most. That, like I mentioned, every brokers have their pros and cons. Whichever one that you trust the most, whichever one that you find is most suitable for you, you need to do your research and try it on your own because on my opinion, I can select one or two particular broker that I like the most, but it might not fit you the best. Therefore, you have to go and do your own research and look for it more. We provide you with all the information. Don't worry about it. So let's move on to the next question. This one is your fans though. You have to look on the question.
I'm not sure whether I'm looking at the right window or not. Is it the Q&A anonymous attendee one?
Yes, correct.
Yeah, I mean, you just go ahead because I don't know where did you stop in terms of the question. So you just
The question on this is by so this is your friend. He has watched a lot of your videos on funding into IBK. I believe it's interactive broker. Yes.
Yep.
I've seen comments in your video that said Wise ACH method is cheaper than Wise direct transfer. How about Wise plus CIMB Singapore method also? So technically, in short, which is the cheapest method?
Okay. I mean, I can answer that question. Just that first of all, apologies to people that don't use interactive brokers. I have to answer this question. Okay. Short answer: Wise plus CIMB Singapore using internal transfer, that will be the cheapest, lowest margin, lowest intermediary fee. But it's not the simplest to set up for a lot of people. So if you start today blank, you just want to invest in interactive brokers, go with the internal Wise funding. That is cheap and the fastest, not the cheapest. But if you want to take one step above, open a CIMB Singapore account, fund your CIMB Singapore account using CIMB's internal transfer, that will be the cheapest lah. But yeah, I think that's the short answer. I don't want to take up too much time in this webinar. Yeah.
Like I mentioned, sometimes this kind of stuff, some people that prefer the simpler way, some people that they don't want to hassle. So like I mentioned, again, do your own research, find the ways that suit you the best. Some people that they don't even want to think about that, just want to prefer brokers that they trust, the banks that they trust. So do your own research, don't be lazy. So next question from Vincent. I have at least 20 years plus before retirement. I have some funds that I don't plan to use in the near medium term. I'm planning more for retirement. Do I add them in EPF, PRS, or US stocks?
First of all, to make an informed, to even answer you, to even give you an informed answer is a challenge in itself because there's not much information I can extract from here. And second of all, I'm not allowed to answer or / give you advice on what is the right way to go moving forward because I'm not licensed to do that, right? And even then, a licensed financial advisor will need to look at the metric before answering you that question. But let me just generalize that question. If you have some fund that you can use for 20 plus years, personally, I wouldn't look at PRS. Just study PRS, private retirement scheme. It's not the greatest in terms of risk to reward. Heck, even long-term historical return is quote unquote shit. So just to put it across, right? So in terms of EPF or US stocks, it's two entirely different vehicle. EPF is your retirement savings. You can't withdraw, or you can only partially withdraw, I think 50 years old. Then you can only withdraw fully at 55. Obviously, if you are only living your life towards retirement, EPF is fine. 5 to 6% is a very strong return. But sometimes our risk appetite changes year over year and we learn new things. We want to venture into business. The next 3 years, you never know. You might find new family commitments or you might find new likings in terms of life. You want to buy that Lamborghini 10 years down the road, or you want to have that bungalow 15 years down the road, right? Why are you stashing all your money into a vehicle that takes you 20, 25 years before you can withdraw? By 55, probably you wouldn't have much energy to enjoy your life, take risks for your business, or take risks that will involve your family as well. So I think by looking at this question, right, you're probably around the 30, 35 years old range, right? I would say you want to contribute to EPF for the return, that's fine. Good retirement planning, good family planning for your kids as well, that's great. US stocks or not, I think this question, right, I think I can also branch out, maybe not just US stocks, maybe look at bonds for stability, for capital preservation as well, maybe just a very tiny bit, maybe look at in terms of other countries' equities, stocks as well, ETFs also fine, or in terms of property investing, it could also be part of your asset, right? You never know. Don't just confine yourself into US stocks in itself, right?
Yeah.
Putting 100% risk into something is not the best idea itself. Yeah, Jay, you were saying something?
No, like I mentioned, don't follow don't just be stuck. Despite the topic today is on US stock, do not confine yourself with just US stocks. There are actually plenty of markets available. Our local market have pretty good stocks industry as well. So do some research. Look for the opportunity on the investment rate rather than thinking of what's the best. There's no one best in forever. There will always be better. So look for the one that's most suitable for you. And let's say if you couldn't find one, learn more. Do not rush into anything. Oh, there's always opportunity. Look for it.
And if I may chip in, right, like what Jay just said, right, opportunities are everywhere, and sometimes the opportunities may not be in the stock market. It may be in a new venture that is in your life. It may be in the form of a business that could pop up in your life 3 years or 5 years down the road. Which is, I think, few years ago, US stocks were everything or the kind of investing / venture that I can look at. But today I have set up my own social media agency. To me, that is also a very high return kind of investment. So I've actually diversified my investment, my money, not just into US stocks, but also into my own company as well. So there you go, different investment assets that will pop up in your life down the road that you won't realize one. So I think hopefully that answers the question. Don't confine yourself to a particular asset / sector. Just be diversified if you want. Hopefully that's the generic answer to it lah. The essence is very subjective lah.
Because some people have, which is why one of the reasons why our founder actually started Investing Note as well, because we don't confine ourselves with just investing on the stock markets. On Investing Note, people talk about all kinds of investment, ranging from equities, futures, exchanges, traded funds, real estate, cryptocurrency, all kinds of investment, and even self-improvement. Because why? At the end of the day, we are the one that's most important. We should invest in ourselves. That's how it begins. Do some research. Learn, be more informative and learn for something free lah. Do you agree with me?
Yeah, definitely. Go for education, 100%.
Yes. Next question. What interactive brokers price management algo, and is it useful?
Actually, I think we can skip this answer skip this question lah. Yeah, it's too technical to answer lah.
Okay, so now we have another of your fans. So hi Ziad, I'm a university student and also your fans, and I have around 20k ringgit for investment. I already deducted all the emergency funds. I won't have income until I work about 3 years later, and I'm considering to invest in ETF or stocks. And I have seen people say that young people should invest in stock as we have less commitment and can bear higher risk. Yet ETF is more stable. I knew that there is no one method suits all things and different investment suits different people. But for long-term investment wise and also personal learning on investing wise, I would like to hear your opinion on this. I think this is quite the similar question on what we have answered earlier. So maybe you want to add on anything on that?
Yeah, I think two things jump out to me. Like first thing is I won't have income until I work about 3 years later. That is a huge red flag to me. Not to say red flag, hear me out first. And then next is your question on what to invest, right? First of all, university student and you won't be working anytime soon, right? Honestly, 20,000 is a lot of money for a lot of people. But when you are in your 25, 30 years old, 20,000 ringgit is not much as well. 100% return on 20,000 ringgit is 10,000 ringgit, which is what? 20k plus 10k is 30,000 ringgit. What can you buy with 30,000 ringgit? A Myvi? Maybe not. A Beza? You can't even buy a Baroda Beza. A car you can't even buy, right? So I'm not looking down at you. I'm not trying to be condescending. Hear me out. My point is 20, 30, 40, 50,000 sounds a lot to you. But if you can invest that money into yourself rather than investing into assets, right, you will make far greater return in terms of your return. You will make far greater returns compared to the kind of godly or godlike trades you can make on the stock market. To me, that's the life advice I would give myself again and again, even for today. If I can put 100k into the stock market, that's great. We have great companies, you got ETF, etc. But 100k in terms of my current life situation, 100K into my business makes a lot of sense as well. Hiring people, running advertisements, running marketing campaigns, hiring talents, these kind of things, that to me is higher return compared to investing in the stock market. So 20,000 ringgit as a student, invest in yourself, look at books, don't spend on courses, keep some of the money. You don't have to spend all on educating yourself. And in terms of learning skills, I think increasing your self-worth, increasing your personal skills, right? And then increasing the amount of money you can extract from your time, your hourly rates. Today, maybe you can be a Grab driver, hard labor, pretty low kind of income, 1 hour, maybe 10 ringgit. But if you learn how to edit video, your hourly rate would become 60 ringgit per hour. But if you learn how to do digital marketing, ad agency, running ads, managing ads, running pages for people, your worth could be 150 ringgit per hour. Then once you learn the full package of marketing, you could be providing consulting services. Your rates could be 300 ringgit per hour. My point is you don't have to really go into marketing, but my point is you have to increase your self-worth, increase your skill sets rather than looking at returns in the stock market. You can put some money into the stock market just to, have fun in it, make it a small little habit to invest, but it's fine at your age, right? Uni level, right? 90% of the time should be concentrated on your self-growth. 10% of the time, look at economy, understand the world news, understand politics, understand economy. That's great. But yeah, that's the gist of it, I feel.
But then just now you mentioned on the economy side, right? So I'm actually curious on my own itself, is that how do actually the economic factors actually affect the stock market? For example, let's say the inflation, the interest rate, and how does that actually impact the stock market performance? Because I believe because I believe almost everyone are hearing about inflation these days. Everyone knows about inflation, but how does it actually impact the stock market? I believe those are some of the questions that people would like to hear on that actually.
So I guess the question is, how does macroeconomics affect the stock market? So I think to answer that question, understand that stock market is a forward-looking mechanism. Whatever is priced into the S&P 500 or whatever is in the stock price right now is all optimism / pessimism and / expectations of what will happen in the future. You don't read the news today, Tesla sale in China goes down, then the share price go down. If you are reacting to that, you are most likely very slow to the market already. So whatever that is being shown on the news most likely already happened. That's why they always say buy the rumor, sell the news, right? So how does it impact, right? I can go 2 hours down in this rabbit hole, but long story short is understanding the macroeconomics is super important. Let's just say interest rates in itself, right? So how to get rich? Money. How to get money? Print it. Governments print money. But how do governments print money? Through something called quantitative easing. So what is quantitative easing? Read. Go back to the fundamental of money. Go back to the fundamental of economy. What is supply and demand, right? Higher interest rates means what? More expensive loans. More expensive loans means what? Expensive money. Expensive money means what? People spend less. People take lesser loans. People spend less means what? Lesser revenue, lesser products being bought, lesser Tesla cars being sold. Lesser cars being sold means what? Lesser profits for Tesla or the company, right? So this is just one thought process, and obviously there's multiple layers to it, but this is just one way of looking at how macroeconomics affect the company's downline and how the share price, so to say, inflation as well.
That's great. And one of our participants actually asked, he or she always wanted to try investing in individual stocks, but he or she is skeptical on whether it will plummet. For example, Motorola and Nokia were giants back then, and they still fear now. So what's your opinion on that?
I think that's a great question. And first of all, congratulations for even have that kind of question and that kind of mindset. That shows that you are very, first of all, averse to risk, but next, you are educated on the risk of investing. I think that's great, right? I think more importantly, if you're skeptical on something, great, do research on it. Why did Motorola and Nokia fail, right? They were great giant companies, but why did they fail? Why? Because they got out-innovated by companies like Apple or Samsung, you know, these kind of companies. Then you look at how did their management reacted before their stock price even plummet, right? Or even at the peak of Motorola and Nokia. What were the company doing? Were they releasing new products or innovating new products, or were everyone was like, meh, it's just another Nokia and Motorola, and people were like, wow, Apple new iPhone is coming, or Mac computer is coming, all right? So I think all those takes time to research, right? But understanding how consumer demands evolve over time is also important, lah. So with your example just now, maybe you can understand why did people ditch button phone towards a flat screen touch surface phone, or why did people start ditching Intel chip computers and move towards M1 computers, Apple's MacBook today, lah. So all these are the ways you would answer that question, and that will fit into your system. Then you will be less fearful of any plummeting or crashes in the stock already. Then you will understand that, oh, let's say if I today invest in a bank is a staple for an economy. So worst case scenario, how much? Historically, 5, 10, 30%. But long term, usually over the long run, good banks, they are the fundamental to a country's economy, a nation's economy. So cannot fail one, so to say. So long term, it will be great. So these are the things that you have to research and understand about.
Like one thing I would add on is that every investment comes with a risk. So study your own risk profile, how much risk you're willing to take, and how much return. Because when there's risk, of course there will be return as well. So understand yourself before you go into the market. However, sadly to say, a good thing comes to an end, and our time is up for today. But maybe one last question. Hi Zed, what would you be advisable minimum fund to start investing in the US stock market, USD?
Minimum fund US dollar to start investing in the US stock market. Advisable minimum, that means like minimum wise, actually few hundred ringgit can start already. Advisable, I mean, obviously I can't give advice. I have to reiterate this 100 times. Personally, I would say start with the range of at least few thousand ringgit at the start, 10 to 15,000 ringgit as an initial capital. Every month, if you can contribute 1 to 2,000 ringgit, I think that's great, right? But if you cannot, right, that's fine. Save up, invest in yourself, then extra money put into a sinking fund or, you know, side investment fund. Then only you transfer towards your brokerage fund can also. You don't really have to invest so hard every single month while you are, you know, not really improving yourself or not having enough money for your needs and necessities as well. So hopefully that answers the question. Again, it's very subjective, right? But personally, on a monthly basis, you know, at my current stage as a 28 years old, right, I will say every month at least 2 to 3,000 ringgit. It might not apply to people, so just tweak it according to your personal situation.
That's great, because I would say, like I mentioned, everyone have to do their own research to see the best way for them to research. One thing is that don't stress yourself out. When something something should be interesting and fun to do, so then you'll be long term. If it's stress you out, it wouldn't last you long term, and you'll give up sooner or later. So thank you so much, Ziad, for sharing with us on your thoughts on how to invest in the stock market. Like I mentioned again, thank you so much for everyone for joining us today. However, we're having a My Favorite ETF campaign running right now that are sponsored by FSM1. Do check it out and stand a chance to win your favorite ETF as well. Thank you so much. See you all next week.
Thanks, everyone. Good night.